On All About Stocks this week, the Sensex reclaimed 28,000. We'll tell you what your investment strategy should be. Car sales skid in March. We'll give you the best picks for the auto sector. And our investment advisor, Sharmila Joshi, tells you why you should be investing in Shriram Transport for the long term. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors. Now, we did have only 3 days of trading in Dalal Street, but that doesn't mean that we're not going to join you this on the weekend to help you decide how to put together a long-term portfolio. Now, remember, if you have any questions at all about your stocks, write to us. Our email ID is at the bottom of your screen, and you can reach me personally on Twitter as well. Let me first bring in Ajay to give us an update on all of the action. Now, it might have only seemed like 3 days to you, but there was a fair amount of action. Ajay, take us through what happened.
We're talking about almost 3% rebound coming in on the benchmark indices this particular week on a combination of factors after having 3 damaging weeks in the previous particular month. Well, a combination of reasons that led to that. The biggest one, of course, was short covering. This particular week, we saw easing of geopolitical worries. Crude oil prices fell pretty smartly. Not only that, almost nudging the 101 level. The dollar index also came back to almost 97, 98 kind of level. So combination of factors led to a very sharp rebound. In fact, Bank Nifty, where the damage was almost 15% or almost 3,000 points, that led to the sharpest rebound in the market. Even Q4 earnings or bad Q4 earnings is already priced into the market. And in fact, brokerage reports and interaction with the management suggest that perhaps some areas like oil and gas, like private sector banks and financials may not be as bad as the stock market was pricing them in. So this was one of the reasons also why we saw a massive rebound coming in. Of course, April 7th, next week, Tuesday, is a monetary policy meet by the RBI, and a lot of traders who were massively sitting on profits still, short traders, perhaps thought of taking some profits off the table and not carrying the short position into a RBI policy week. If there is a dovish kind of commentary coming in, that would have hurt them, and that is also one of the reasons. So tomorrow or the next week will be very interesting one to gauge the near-term direction for the market compared to what kind of or depending on what kind of commentary we get from the RBI.
All right, Ajay, thank you for that update. Joining us today, Sharmila Joshi, who's been helping us for a very long time with our stocks. Sharmila, thank you so much for coming in. Agreed, it was a really short trading session, but it was very interesting. If we look at what, where we were on Friday last week and how the market turned around on Monday, while the reasons might have largely been global, that really was an opportunity for a retail investor to enter, wasn't it?
Oh, absolutely. And I think, I think the debate last week was whether this market is going to correct further. And there were a lot of people, I would say the jury is still out there, whether you will see levels of 8,300. But I think the point remains that if you see the kind of correction that you did last week, and a lot of mid-cap stocks begin to look good from a valuation perspective, then you should incrementally start buying, even if you don't put in your entire amount of money. It's always a good strategy to buy something in every drop.
We're at the beginning of another earnings season. Are you expecting numbers to continue to be disappointing like they were the last time? Is there any reason at all for a silver lining in this season?
There's, I think, no way in which numbers can be better, probably worse. But I think the only thing that really stands in favor of the Q4 earnings is that, it sort of plays out for a longer period of time. So you don't feel the negative impact in one go the way you do in the other quarters. So I think the significant sector to watch for is going to be IT, because you do get a sense from a lot of the managements on how they expect, FY16 to play out, because they've had enough time to sort of get into discussion with their majors.
HCL Tech's earnings guidance sort of hurt the market, or hurt that entire sector a little bit today, didn't it? So are we expecting sort of muted results from the whole sector?
Yeah, everyone has said that this quarter is going to be bad. It started with TCS. I think Infosys sort of echoed that. Across the board, I think IT companies have said that they are going to get impacted by cross currency. So there's no way that the quarter is going to be good. I think the focus will now shift how they are expecting FY16 to play out in terms of business, because if the recovery in US is firming up, then they would have already got some kind of an indication of how IT spends are going to be, and they will base their outlook on that. And I think that's what market will now wait to hear.
All right. Let's also talk about the auto numbers. Now, Ajay was just telling us as well that they weren't very impressive for the month. Do you believe that, again, those sales numbers are going to take longer to recover? Are we going to wait for another cut from the RBI before we see things like auto numbers, like bank lending numbers improve?
I think you have to see a cut from banks now more than RBI. You know, your lending rates have to,
they have to actually come down.
They have to come down. Otherwise, there's no point in any cut that RBI does. So I think the focus will be on that. Again, I think auto numbers were in line. I don't think they were expected to be any better than what they were. So the focus will be on which are the companies which are introducing new models, how the CV cycle plays out, because that's showing definite signs of recovery and that's getting reflected in numbers again. And I think I'm expecting good things from a lot of the two-wheeler players. So now you'll really have to, for tractors and the other bit, you'll have to really wait to see how monsoons play out. But I think the CV cycle has definitely shown, underlined once again that they are on a recovery path.
You know, we asked Sharmila to pick a stock that we can buy at these levels, and she was kind enough to pick a stock for us. She's picked Shriram Transport Finance. That stock is on your screen right now. It ended the week at 11.49. Tell us why a finance company and not directly an auto stock?
Actually, it's a play on the recovery in CV cycles, which I was alluding to, because I think that, everybody knows that Shriram Transport is in the business of financing largely second-hand CVs, but also first-hand. And what they've really seen is,
that's commercial vehicles for those of our viewers who don't know what a CV is. But
yeah, so sorry, commercial vehicles. So I think that, that commercial vehicles as a space has begun to show recovery. We've seen better numbers, whether it's Ashok Leyland, whether it is Tata Motors, all of them are showing better numbers in that segment. And Shriram Transport will benefit from that for the first-time buyers. Even I think when it comes to second-hand buyers, what will also be in their favor is the fact that that entire mining belt, those states, they were showing very subdued or lower numbers in these last 3-4 quarters, largely because there's nothing happening there. But now I think that, with all these bills getting passed and all the policy getting cleared, coal auctions have taken place. So, you will definitely see a pickup of activity in those states, and this will mean better numbers for Shriram Transport. And I think the third thing, again, what we've spoken of, that if interest rates actually get softer, it will mean that their financing costs will come down and their margins will improve. So I think all three things now seem to be in favor of Shriram Transport as a business. So while it is a play on commercial vehicles, it's also a play on your economy, and it's also a play on the fact that interest rate cycles will come
what
down.
Sort of a time horizon should I have on a stock like this, and what would your target be at this point?
Very honestly, I think this is a very fine company, very well-run company. You shouldn't be looking to sell it in a hurry. My first target would be 1500, but I would really say that even when it gets to 1500, you should really see if there is any reason to exit it.
We have a question that's come in from Ravi. He has 600 shares of Unitech, which he bought at 34 rupees, and 500 shares of GMR Infra, which he bought at 36 rupees. Should I hold on to that stock? Let's talk about GMR Infra first. There's some talk about listing that airport business. How much of a difference do you think that will make to the stock?
Honestly, if you ask me, both companies in terms of recovery for their businesses seem okay. Both have done things to sort of make their books better, but I just feel that in a market like this, which is giving you a lot of opportunity, some of these leverage plays may not do so well going ahead, because people will differentiate going ahead.
No, so the GMR Infra stock, if we look at it for this week, it's on your screen, it was up about 8.5%. Should he use that opportunity then to get out of that stock?
His buying price is high. I think, my worry is that it's going to take a very long time to reach 36, and then after 30,
16
it's going to face some kind of resistance there since it's at 17. That means you're talking of like 100% appreciation. So I think that's what's really going against my advice really at this point in time, because otherwise, at current price, both stocks look okay, but because his buying price is so high, you don't know how long you'll have to wait, and then,
Okay, so if he decides to cut his losses, what would you like him to buy instead?
I think really honestly, from a very safe perspective, pharma is the best bet.
Okay.
So within pharma, I think you can pick a frontline stock, or I think even an IT stock, post numbers. If you see a fall in any of them, including an HCL Tech, I think all of them will do better than what either of these stocks have done.
If you want to cut your losses on GMR, one of the pharma stocks might make more sense. What about Unitech?
Yeah, I think the same goes there, because the buying price is high, I think, and real estate is going to take time to recover. So it's a good idea. Again, I think any stock within the IT space or pharma is what I would replace it with.
Survadeep has written in, please suggest a few stocks in the cement or the banking sector for a 1-year horizon. Now, Let's first talk about cement. Do you believe there's enough value there, and do you believe the construction boom will come back in India and that we should be buying cement stocks at this point?
Yeah, I mean, if you're expecting a better GDP number, which all of us are, then the directly correlated stock space to be in would be cement. And it hasn't really done anything. You've got a whole host of stocks that are, up 200%, 150%, all kinds of fancy numbers. So I think cement is just sort of there, just
it's
giving
due
a little
for some sort of
yeah. So I think whether it is, and again, I think they've had a big capacity expansion, and those cycles also take time till sort of utilization catches up. And just now, the kind of utilization levels they are at, and if that were to go up on the back of good activity, then I think that these stocks could all trade at higher levels than where they are today. But I think the holding period could be a little bit more than the year that the investor is talking of. But other than that, I think this is a good sector to be in.
What would you recommend within the cement sector?
I've actually played it safe and gone with the sort of frontline plays. I've gone with Ambuja Cement and Ultratech, though I think a lot of market fancies south-based cement companies simply because prices there could go up faster. But as I'm saying, I've just sort of played it safe and gone with frontline stocks.
What about the banking sector?
Again, I think banking sector, if you're expecting a pickup in economy, then it stands to reason that you will see an improvement in the sector. But here I've gone with private banks really, because I think that NPA levels are still far from where they should be, and that's going to continue to be a problem for a PSU bank. So that's at least a couple of quarters away. And in the meantime, I think private banks will actually start doing better. So I've gone with Yes Bank and DCB, very different sort of private banks, but Yes Bank is a new entrant into the Nifty, so it should benefit from that going ahead. And DCB is a slightly smaller private bank with a very unique sort of a business model as compared to other private banks. So I think both should give you decent returns with a 12 to 18 month perspective.
Welcome back. You're watching All About Stocks in ET now. Sharmila Joshi is still with us, helping us figure out the strategy for our long-term portfolios. It's time to look at the portfolio that Sharmila designed for us on this show on the 9th of January 2015. She churned her entire portfolio of stocks and placed a whole new set of portfolios. That's the portfolios at an overall gain of 15%. The Nifty over the same period is up 3%. So she's beating the Nifty there. Let me give you a list of stocks. There's Thermax, SKS Microfinance, Berger Paints, Havells, Lupin, Tata Steel, Century Plyboards, Ashok Leyland, ICICI Bank and Persistent Systems. Well, these stocks are doing fairly well. Sharmila, would you like to make any changes at this point? Do you think it makes sense to hold on? There's a little bit of pain there from Persistent and from Tata Steel. They're both down about 18% each. Any response there for viewers who might be a little worried?
Well, Tata Steel I can imagine because overall metals has seen pain, and I don't really see it as a cycle recovering very soon. But we've just recently churned the portfolio, so let's go with it.
Okay.
Persistent System again, I think it's really suffered because of all this cross currency winds that we are hearing of, and I think the management was again on television and media, and they said that this quarter is likely to be subdued. So that's pretty much been the story for
all the IT stocks.
Plus, Persistent System had its X bonus. So sometimes these stocks, after they get X bonus, they go into a bit of a loop for a while. So it's in that spot just now. So I wouldn't worry too much about it. I think that from this level also, Persistent System, my target would be closer to 1,500 rupees.
Well, I also want to talk to you about Berger Paints. It's down 12% since we bought it. And I remember when we talked about it, you said, given where crude is and the fact that, the paint company or the business will benefit from the lower price of crude, what's going on with Berger Paints?
Yeah, again, I think perhaps, when crude started correcting, that basket sort of took off. And, then it was correcting and possibly we bought it somewhere there. But, given the fact that really speaking, we haven't seen any of the benefit of lower crude prices in numbers, and that's only going to play out in the next year. And again, the fact that I'm not seeing crude run away anywhere. Yes. If anything, I expect crude to trade lower than where it is. So I'm not really too worried about that. But probably, it's just that, we chose to buy all the stocks on a day, and typically you wouldn't really actually do that in real life.
Spread out your cost.
You would tend to spread it out.
All right. So I'm going to give you a recap of Sharmila's portfolio. Remember, we're holding on to these stocks. We only bought them in January. Thermax, SKS Microfinance, Berger Paints, Havells, Lupin, Tata Steel, Century Plyboards, Ashok Leyland, ICICI Bank and Persistent Systems. If you have questions about that portfolio, feel free to get in touch with us. We'll ask Sharmila those questions on your behalf the next time she comes back into the studio. Now, speaking of questions, we have one from Hari Om who's written in. He wants to know if you should be buying Motherson Sumi Systems at current levels for the next 3 years. That stock is going to pop up on your screen right now. It ended the week at about 508. It's at a 52-week high, at the end of the trading week, which was on Wednesday. But it's been a stock that a lot of the, advisors on this show have recommended, Motherson Sumi. Let's talk about valuations at these levels. Do you think it makes sense for the next 3 years?
Because it's 3 years, yes. Otherwise, as you were discussing, it's hit a 52-week high, and sometimes stocks again when they hit a 52-week high, they do tend to trade a little lower. So I would try and buy it on declines. But because the investment horizon is 3 years, and because it's such a fine company, and the way you're seeing revenues as well as profits play out over the next couple of years, even if you bought it at 508, maybe you would see pain for a while. But otherwise, I think with a 3-year perspective, you should do okay.
And would you recommend he staggers that buy? Remember, we were just talking about the fact that don't go and buy everything in one day.
Absolutely, so buy 25% now, see if it falls 5-10%, enter again. If you do see these sell-offs come in mid-caps every now and then, use those opportunities to enter the stock. This is a stock, I must say that I've been recommending to clients, but at much lower levels, when it's just done this run up, but closer to 400, 415, 420 levels, I've been buying this.
All right. There's also a question from Yuvraj Sen. He's written in saying that he has 100 shares of NIIT at 68 rupees on an average and 15 shares of Axis Bank, which he bought at 462. Should he hold on to both of those stocks? NIIT ended the week at about 38 or 39 rupees. Hold on to NIIT?
Yes, I think, yes. It is not a company that's doing terribly well within the IT space, but I don't think that this is the price to sell at. So if his investment horizon is reasonably okay, I think this is a stock that he can hold on to.
Also, Axis Bank, interestingly enough, he is making a profit on this stock. But given the fact that we're going to see a reducing interest rate regime coming over the next year, it makes sense to hold on to a stock like Axis Bank, doesn't it?
Absolutely. And I think it's also going to benefit from that change in FI ownership, etc. So you did see a lot of buying coming in on Axis Bank. Numbers have been okay. So there has also been a thought process that why would you be invested in some of the other leading private banks, as compared to an Axis Bank. So there has been a bit of a catch-up in valuation. So a lot of things have played out in favor of Axis Bank in these last 2-3 months. So maybe the rate at which it has gone up could slow down a little. But again, I think that if you're talking of at least a 12 to 18 month sort of a investment horizon, then you should hold on to Axis Bank.
All right, hold on to Axis Bank. Sridhar Rao has written in. He has 300 shares of Coal India, which he bought at 392 rupees. And he also has Group Finance, which he bought at 314 rupees. Should I hold on to both of those stocks? That's his question. Coal India ended the week at 363. This is another stock that everybody's been waiting for it, to sort of realize its full potential. Let's put it that way. When do you think that's going to happen? And for investors like Sridhar, what would you recommend he does?
I would say hold. The stock did go close to 400 levels in, I think, just maybe like less than a month back. It's gone ex-dividend now, so I think that's the other big reason. It's a big dividend, it pays big dividends. So the dividend yield tends to be high. So I think from that perspective also, it's good sense for retail to hold on to stocks like that. And I think we are slowly seeing all these issues getting sorted. So hopefully, the kind of the kind of sales that Coal India will be able to do will improve. So that aspect of business will also improve for them going ahead. So I would have targets closer to 400 on the stock, very honestly, not very far away from where he's bought. But as I said, because the dividend yield is good, it's a good stock to hold on to.
What about Group Finance? He's losing money on that stock. He bought it at 314. Does he, how long is he going to have to hold it in order to recover that value?
Yes, I think again within the housing finance space, it's a decent stock. I'm really surprised that he's sort of suffering so much on this stock. But I think give it time, because I think that we are seeing some amount of policy changes coming for housing finance companies, especially which are in the smaller ticket size sort of a thing, sort of tax benefits for such buyers. So I think all that will play out in favor of Group Finance. So I think be a little patient and maybe keep a 12 to 18 month kind of a horizon in your mind.
All right, I have time for one question. Snehal Harshad has written in. She has 500 shares of Opto Circuits, which she bought at 27 rupees. Should I hold on to that stock? That's her question. Opto Circuits on your screen ended the week at about close to 20 rupees. What would you recommend she does?
Actually, this company has done horribly, in terms of numbers. But it's just that there has been some changes in this budget, which, for export of medical equipment, etc. So I would say just from that perspective, just hang in there for a couple of quarters and see if you see any betterment in numbers or any pickup in orders, etc. If they are able to report a better top line, and then take a call from there. But actually, if you ask me, the numbers have been pretty disappointing for Opto Circuit.
Welcome back. You're watching All About Stocks in 80 now. Thank you for staying with us. Sharmila Joshi is still with us, and we're looking at long-term portfolios. It's time for us to look at the portfolio of our one lucky viewer, and this week our viewer is Shirish. He sent us a list of stocks in his portfolio. I don't think this is the entire portfolio, Sharmila, because he's only sent us 4 stocks. But it's an interesting pick of stocks, the first of which 105 shares of Castrol India, which he bought at 305 rupees. He's making a nice profit on that stock. The stock ended the week at around 467. But hold on to it further. I mean, I'm going back to what you said about crude oil prices. Does it make sense to hold on to Castrol India?
Absolutely, and it's a niche play, because I don't think that there is any other player in this lubricant kind of a space. So, I think the kind of background that Castrol has in terms of the kind of profitability they've delivered. So historically, a very strong play, and I don't see any reason to exit such a stock, especially when you're making a fairly decent profit. So I think just keep holding it.
All right, so keep holding that stock. He also has 105 shares of L&T, which he bought at 900 rupees. L&T ended the week at 1734. So this is a great portfolio. He's making a lot of money. So obviously his question is, should I be taking any profits off the table? Would you recommend he holds on to L&T, or should he be taking something off the table at this point?
Well, he's bought it at a great price. There's no doubt about that. And I think that in terms of business, things have just begun to improve for Larsen. I think their order book will move up substantially in the coming quarters. So wait and see how that plays out really. My first target on Larsen would be closer to 1900, which is not very far from here. But I think that if you see it getting there, you need to see why it's there. I mean, are you seeing an improvement in the order book, etc.
Right.
So wait for at least this quarter numbers. You will get a sense of how the year has been for them, and then take a call. But my sense is that this is a stock that you should hold on to.
Okay, I'm going to rush through the other two because I know what Sharmila's answers are going to be to these two stocks. He has 44 shares of Mindtree, which he, believe it or not, bought at 666 rupees. That stock is at 1354 right now. Obviously, hold on to Mindtree.
Yes, I think that, as you said, that it seems like a very strong portfolio with very good mid-cap, good quality mid-cap names. So I think yes, definitely go ahead with Mindtree.
Last stock on his list is Finolex Cable, which he bought at 80 rupees. The stock ended the week at 289. Well, Shirish, congratulations on picking such fantastic stocks. We hope, of course, the new financial year continues to do as well for you. But hold on to Finolex Cable.
Yeah, absolutely. As I said, 4 good quality mid-cap names, I would just continue to hold them.
All right, hold all of them. I'm required to ask you for a very quick disclosure on the stocks we talked about.
We've spoken of quite a few stocks, so I may have recommended them. I could be holding some of them.
All right, Sharmila, thank you so much for spending time with us this week and answering our questions. If you have a question for Sharmila Joshi, write to us. Our email ID is at the bottom of your screen, and you can reach me personally on Twitter as well. Thank you so much for watching.